four companies, that is Titan, Kalyan, as well as Senco Gold and PNG. But overall, if we take a look at the average gold prices that have been up 40% on a YOY basis, it stood at around $2,475 in Q2 FY25, which has now gone up to an average of $3,456. So the gold prices itself have moved over 40%. Now that compared to the growth for all of these companies in the jewelry segment YOY basis, if we see, Titan has seen 19%, Kalyan Jewellers at 31%, Senco Gold hardly at 6.5%, and PNG at around 8.6%. Now, this actually indicates that the kind of volume growth that was expected to come in has not come in. The entire growth that is there is around the value, and that is because of gold prices going up. Q2 has also witnessed a growth in studded mix. That's the other trend that we've picked up, and that could possibly a good indicator of margins going ahead also. So for margins, it could be possible that margins could expand on the back of rising studded mix. But on the other hand, managements are spending a lot in terms of marketing spends. And that could overall put pressure on margins as well. Now, moving back to the earlier side in terms of store expansion as well. Store expansion has been on a strong footing. Titan added 55 stores, Kalyan 32 stores, Senco 5 stores, and PNG at around 8 stores. So store expansion has been a strong footing in terms of margins as well. We did take a look as to how the kind of way the marketing spends have been made could offset the kind of studded mix that's been going up. But moving on in terms of the other aspect, which is in terms of, we'd already talked about this as to higher marketing cost could be if affecting the margins. But in terms of where stronger Q2 updates have come in, Titan, the strongest one, the expectation was around 12 to 15%, which is come in at 19%, so a strong one there. PNG, another strong one, because revenue excluding refinery was up 31%, and this is on a stronger footing. But something that's not done well is Senco Gold, 6.5% versus overall full year guidance of 18 to 20%. And the other one is Kalyan, because weakest since the past 4 quarters is what we've seen in terms of this quarter growth, and that's reflected in the same store sales growth as well. Lastly, in terms of valuations for all of these counters, well, none of them are cheap, as we can see on the screen. Titan trading at around 85 times trading 12 months. There's Kalyan trading at around 62 times. Senco slightly cheaper than Titan and Kalyan, but Titan and Kalyan are much bigger as compared to where Senco stands. And PNG, the cheapest one, which is trading at around 14 times. So this is with regards to where jewelry companies are concerned and how trends have so far fared, where Q2 business updates are concerned. Rajesh, I'll quickly come to you on this one. Any of these counters that are looking attractive on the charts right now?
So I think if I analyze all these companies, I think Kalyan Jeweller is showing sign of some recovery after this corrective move. Looking at the near-term, short-term structure, stock is having immediate resistance area at around 495. So any breakout above 495 can take this stock further higher, and then possible target towards 510 to 520 we may see for Kalyan Jeweller on the higher side. So at this juncture, those who are already bought or willing to buy at current level should keep stop loss towards 472 to hold the position. Breakout over 495 can attract more buying action in this counter.
Jewellers, one should